Welcome to our early morning classes on a very interesting subject of indirect tax. The relevance of this subject is that in our day-to-day life, the tax which has the regular and the most lasting impact on us is an indirect tax. And that is why, as a professional, in practice also, indirect taxes play a very significant role. Now, within indirect tax, earlier we had multiple taxes, but now, since 2017, we have subsumed around 17 of the different central and state taxes and made it into a single unified GST, which is a dual tax because parallelly both center and state levy their taxes. Now, when we talk about GST, in GST, we have two categories of transactions, interstate and intrastate, same state. The tax that will be levied is CGST, SGST, half. Whereas when the transaction is that particular case, the tax that is levied is called as IGST. Now, in our first chapter, which was dealing with the taxable event, we studied the concept of taxable event, which is supply. However, when we come to this chapter, which is the chapter which is, as we are discussing, an indirect tax and which is charged to you, on what basis the lawmakers have decided to levy or impose this tax. Now, as we were discussing in our previous lecture, this charge of GST is created through section 9 of which provides as to on what, how and when the tax shall be levied, is called as the charging section. Also, if you recall, I have explained you this very important landmark judgment, that is of Govind Saran Ganga Saran, because it brought out the four important limbs of levying the tax. So, until unless all these four things are present, a levy of tax would fail. First, there has to be a taxable event, which is supply in our case. Then there has to be a taxable object. And lastly, you have to determine the value and by whom that tax would be payable. Now, all these things you will find. So at the same time, you have to understand the difference between both the charging sections. That is, you have to understand the charging sections have in the charging section. Now, what are these 5 components that we had discussed in detail in our previous class? We will quickly. I was also explaining you that when you are reading a law, there are certain terminologies that are to be understood while reading the law, like what is this phrase subject to meaning? So subject to meaning is that whenever a section starts with the superior to the other section to which it has been made subject to. So subsection 1 says that it is subject to subsection 2. So subsection 2 gains a superiority. And hence, while reading and interpreting the law, you should read the subsection or the section which is given superiority. So we started with subsection 2. And basically what has subsection 2 done? Both in the CGST and the IGST acts. In both acts, subsection 2 is nothing but it is the subsection to defer the levy of GST on 5 petroleum products. So the GST on these 5 petroleum products is deferred for the time being. That is done by subsection 2 of both CGST Act and the IGST Act. And then when you come back to subsection 1, which says subject to subsection 2, it means other than these 5 petroleum products, for all other products, there will be the levy of GST. How? So the law says, subsection 1 says that there will be levied a central tax because you are reading the CGST Act. In SGST, they will call it as the state tax. So there will be levied a central tax on what? On intrastate supplies of goods, service or both, except alcoholic liquor and ENA. We again discussed a judgment over here relating to ENA in the previous class. And then it has provided the measure. So this tax will be levied on the value and at the rate value which is as per section 15 of the CGST Act, and the rate which will be notified by the government on the recommendation of council. Again, this rate for CGST, SGST should not be exceeding 20, and for IGST should not be exceeding 40%. And then finally, the first subsection says that this tax would be collected as may be prescribed. Now, whenever any sentence of the Act uses this phrase as may be prescribed, it means you have to refer to the rules. Whenever it will say as may be notified, you have to refer to the notifications. So the manner of collection will be prescribed and it will be payable by the taxable person, who means the person who is registered or liable for registration. Now, when we parallelly read subsection 1 of the IGST Act, again I explain you one more legal term, which is mutatis mutandis. We will always say this, that section 5.1 of IGST is mutatis mutandis to section 9.1 of CGST, which means mutatis mutandis means same to same with some changes, and which are obvious and necessary changes. So when you read section 5.1, this part is copy paste of 9.1 with necessary changes. So wherever central tax is used, here instead of central, it will be integrated tax. Wherever intrastate supply is used, here it will be interstate supply. So that is the only difference. And over there, 20% is the maximum percent. Here it is 40. Remaining everything is copy paste. Now, when you come to the proviso, this is what is a very important part of section 5.1. It says that the tax on import of goods, it will be IGST only, but on import of goods, the levy, the collection, the valuation, the point of time when this tax has to be levied, everything will be decided by the customs law. So IGST is applicable on import of goods, but everything from levy to collection will be determined by the customs law. So that is where they have shifted the levy, the collection, the assessment, valuation, everything to the customs law. But you have to remember that only the procedural part has been shifted. The tax always remains IGST. Again, here we understood that whenever a para in a section or a rule starts with the word provided that, it means that para is the proviso to the main section, which is there to create some exception or put some restriction or condition. That is what exactly this para has done. And then we have subsection 3 and 4, which says that for some specified supplies, the tax would be payable by the recipient instead of the supplier. So wherever the supplier pays tax, we call it as forward charge or normal charge. But where the methodology is reversed and the recipient is made to pay the tax, we call it as reverse charge. So 3 and 4 subsections of both section 5 of IGST and section 9 of CGST creates the provision for levy and collection, and where the collection is from the recipient. That is, those transactions are called as RCM. And then we saw the list of RCM entries. Now, with relation to this, if anybody has any queries or doubts, I'll first take up your queries or doubts. I'm sure you would have read in detail all these things from the module. So in case you have any queries or doubts, I'll first take up that and then we will proceed. So your query, students. So what? Yes, Radha, you're right. So I'm not denying that. That will be done. But right now I'm asking if you all have queries in this. Yes. Any queries in this, students? No queries? All through? Excellent. Yes, if anybody else has queries, you may please ask, or else we proceed to our next part of this chapter. So in the previous class, we studied all the entries which are covered in the RCM as per section 9.3 and 5.3. No queries? Okay. Now let us go to some circulars and clarifications relating to the RCM entries. So in our RCM entries, entry 15 was dealing with RCM by way of renting of motor vehicle. Now let me just take you back to that entry first. So this is the entry where it has been provided that whenever services are provided, what type of service? Renting of motor vehicle designed to carry passengers where the cost of fuel is included in the consideration. When this type of service is provided, and then there is a condition that the provider should not be a body corporate, but the recipient should be a body corporate, this service will be under RCM. And then similar to GTA, it had the condition that the supplier should not be charging tax at the rate of 18%. Now let me tell you, students, there is amendment in the tax rates, but unfortunately, the RCM notification is still carrying the original rate, which was before amendment, which was 6%. So I have, while presenting you the notes, I have changed the figure from 6%, that is 12% to 18, because the tax rate has changed, but somehow they forgot to make a parallel change in the RCM notification. So the situation as far as this RCM on motor vehicle renting is concerned is, if you'll find this very similar to GTA, that first you have to check is your supplier levying tax at the rate of 18%. Now question is, why will a supplier select a higher rate when you have another rate of 5%? Again, if you remember GTA entry, I had said that whenever you are levying a higher rate of tax as compared to the lower rate, that is because in higher rate you are allowed complete ITC. So whenever the supplier has opted for levying GST at the rate of 18% because the supplier wants the complete ITC, the tax is levied under forward charge. Second is the supplier can opt for 5%. Now, if the supplier has opted for 5%, then you have to see the nature of supplier and recipient. Now, in this case, if the supplier is a body corporate, RCM cannot apply, because whenever the supplier is body corporate, it is always out of the RCM notification, because that is one of the basic condition. So this will again come to forward charge. Next, where the supplier is not a body corporate, Then you see to whom he has supplied the service, whether it is to other than body corporate. If the supplier is other than body corporate and recipient is also other than body corporate, that is not a company, again the tax is under forward charge. But only when the supplier is not a company but the recipient is a company, the tax is under reverse charge. That is, the recipient is required to pay the tax. So, in case of GST on motor vehicle renting services, the first clarification as per circular number 130/49 is this. Now I come to a very interesting point. What is that point? If I compare this entry with GTA, because both are parallel, one is goods transport, one is passenger transport, there is one big difference. This entry is not using the word passenger transport. This entry has used the word service of renting of motor vehicle designed for carrying passengers. Now the question, the issue is whether renting of motor vehicle service, which is covered in this RCM notification, is it the same as passenger transportation service or is it different? You have to understand this first. Now, a bare reading will say, sir, why? There is no difference. But go to the fine prints of it. You will realize there is a difference. Now, somebody will ask, sir, what is the difference? So let me give you a simple example. The example is, you are traveling with your family, let us say now, in a weekend, in the next weekend, or in the 15th August weekend, you want to travel with your family to a distant place which is around 200 kilometers far. Now, what we do normally, whenever we are traveling or we want to travel, go on some tour or vacation, we hire a person or we hire a tour operator, and we tell the tour operator, boss, send your car. Obviously, the tour operator many times will also provide the driver. We always ask for the driver. If the tour operator is providing me the car and he's charging me for the car plus the petrol cost, in that particular case, that service is what is renting of motor vehicle service. And obviously the motor vehicle is one which is for passenger transport. Now, as against this, what is transport of passenger service? So you'll say, sir, what is the difference? So second option is, you go to a bus stand, you go to a taxi stand, and you take the bus or taxi which is going on that route. Now, what is the difference? In the first case, which is the renting of motor vehicle, you have taken the motor vehicle and you decide where to go. You need not inform prior कि भाई I will go here, I will go to this address, I will stop here, we will wait here, nothing. You are given the motor vehicle and it is in your control for that whole day. This is what is renting of motor vehicle. Whereas when we talk about passenger transport, you have to go to the bus stand, you have to go to the taxi stand, and from there, the bus or taxi which is already running on a particular route, you take up that, you pay the fare, and they will drop you at their designated bus stop or taxi stand. And it will not be running completely as per your timing. It will not stop at the halts where you want it to stop. It may stop in between, but that will be decided by the bus driver or the taxi driver. So what is the difference? In case of transportation of passenger, the entire transport journey is in the control of the operator. Whereas in case of renting of motor vehicle, the journey, the entire control of that vehicle is with you, that is the recipient. The car will come to your house. You may have given the time of morning 6, but you may start at 7. It is your choice. After starting wherever you want, the car will stop as per your requirement. No questions asked. Why? Because you have hired the motor vehicle. So this is what is the difference. I hope students have understood this difference, because there is a huge difference in the tax implication, including who will pay tax. So for passenger transport, there is no RCM, there is no option 5 and 18 and with ITC, without ITC. But for renting of motor vehicle, all these differences are there. So there is taxation in there is difference in the tax rates. There is difference in the forward charge, reverse charge mechanism. Later on, when we study exemption chapter, again you will find there is a difference in the exemption notification also. So be clear between these two types of services. I'm sure everybody has understood this. Again, this is clarified wide circular number 177 of 2022. Fine. Clear to all? So, renting of motor vehicle, when done by a person, service provider other than body corporate, recipient body corporate, will fall in RCM, where the tax levied is not 18%. This is the express condition. Is this fine? So, where the body corporate hires the motor vehicle for a period of time during which the motor vehicle shall be at the disposal of the body corporate. So, who is having the control? The recipient. The service would fall under this category of renting of motor vehicle, and the body corporate, that is the recipient, will be liable to pay tax under RCM. Further, RCM would apply on the act of renting of vehicle by body corporate, subject to fulfillment of other conditions whichever are prescribed. And in this case, the body corporate may decide how to use that particular vehicle, and it will be subject to the agreement with the person. Where the body corporate avails passenger transport service, which will be obviously for specific journey voyage. As I was giving example, the car or the bus is traveling on their fixed route at their fixed time. In that particular case, it becomes a passenger transport service, and then the body corporate need not pay tax under RC. Now, moving further, students, the next clarification. So first was relating to passenger transport service, that is renting of motor vehicle versus passenger transport. Now, the second second clarification is with relation to the RCM on directors. Now, wherever the director's remuneration is treated as salary and the income tax TDS is under section 192, then we have already studied that such a transaction is not leviable to GST. Why? Because it forms part of Schedule 3. So within director's remuneration, when you are testing the applicability of RCM, first test whether the remuneration payable to the director is in the nature of salary and TDS is under 192. Then comes the second category, where the director's remuneration is not treated as salary. That is, the income tax TDS is under 194J, not under 192. Then it is not falling in Schedule 3 and hence it is taxable. Now, besides, as already discussed, the recipient of the said service, that is the company, is the person liable to pay GST under RCM. This is clarified by a very old circular number 140 of 2020. Then there is another circular which further clarifies that. Now, if you remember, we had discussed this also, that a director may also be having some independent services, like the director is a chartered accountant, and besides being a director in the company, is also having his own practice of chartered accountancy. Now, when the director is providing any service to the company in his personal capacity, that is not as a director. Now, these services, one, as I gave you example of a CA service. Two, let us say the director has given his own property on rent to the company. Now, in such cases, the question comes whether this all will be covered in RCM entry. The answer is no. RCM entry will cover only the services of a director as a director. That is, only the directorship services of the company are covered in RCM and not any other services. Now, students, the next issue is whether Delhi Development Authority will be treated as a local authority. Now, first question is, sir, why is this discussion relevant? Because when we proceed, you will find that first, under RCM, there are some entries that where services are provided by government to a business entity. Now, government covers central, state, local. So over there, there is a relevance of local authority definition. Second, when you study exemption, again over there, there is a relevance of local authority. Now, when we talk about central and state government, generally there is no doubt because we clearly identify who is central government, who is state government. But when it comes to local authority, there is a lot of confusion because in every state and in different cities, there are multiple local bodies. Now, this is where the confusion arises that whether every local body is a local authority. So for this, we have a very recent circular which says that, which was specifically dealing with one specific local authority, that is Delhi Development Authority. But the principle given over here will be very helpful in determining the issue for other local authorities also. What it says, it has been clarified that local authority will mean who? It will be meaning an authority which is similar to an elected self-governing body. So first thing that you have to check is whether the members of that body, local body, whoever you are talking about, are elected. So have you elected them through voting? Point number one. Second, are they acting as a self-governing body? Like how you have municipalities, municipal corporations, which are self-governing body. And the most important part, are they having the power to control and manage the fund? So three things, they should be elected, they should be having governing rights, and most important, the local fund, they should be having the control and management of the local fund. Now, when all these three tests are satisfied by any local body, you will call that local body as local authority. Now, when all these three tests were applied to Delhi Development Authority, it was found that it is not having the power to control and manage a municipal or local fund. And hence, since this was missing with Delhi Development Authority, the circular clarified that it cannot be called as a local authority. So automatically RCM provisions, exemption provisions will not apply. So what is relevant over here, students, is that this definition of local authority is going to be very relevant. And for every local body, you have to apply these three principles to determine whether the local body will be treated as local authority. I hope this is understood by all. Any questions, students? Yes. Chalo, we'll do one thing. There is a lot of one-sided discussion. Now I allow you all 5 minutes. Next 5 minutes, I want you all to come up with your questions, maybe directly related to this chapter or in general with your, you can say studies also, with your any part in GST. Why? Because I just want that our lecture should be more interactive. So before I proceed, chalo, I allow you this option. You can raise your hand. I will unmute you. We can have a general discussion. May not be only GST, overall studies. If you have any queries in GST, that is also fine. If not, then even in overall studies is fine. Radha, can you unmute and ask the question so that others will also understand? Acha, so I think the problem is better because you have joined from your mobile phone. So if you join, I think from laptop, then this problem you may not get because the application of unmuting, I think, is supporting laptop and not mobile. I think so. This is my understanding. So if anybody has joined from laptop, I will unmute you. You check whether you have also uh, see when you join this Zoom meeting, you have that audio joining option. Many times we do not join through audio. Check if you have done that. Your audio option is showing, but I don't know why you are saying you are unable to speak. Okay, no problem then. So your question was tax rate for BC for motor vehicle. I did not get what is your question, Radha. What is BC for motor vehicle? Can you clarify your query, Radha? So but what is the difference in tax rate when it is for a body corporate? See, the body corporate point is only affecting the RCM provision, that where the supplier is not a body corporate and recipient is a body corporate. But it is having no impact on the tax rate. The tax rate is same. The difference in tax rate is between transport of passenger service and renting of motor vehicle service. That is where the tax rate difference is. Yeah, so if supplier and recipient both are body corporate, see what do you mean by body corporate? One simple case is company. So supplier is also company, that is a service provider who is giving you the service, and the recipient is also company. Why? Because the company has availed this facility for its employees. But in that case, RCM will not apply. Correct, Radha? Fine. Gurram Venkata has asked a question. Sir, can you please explain corporate guarantee and whether corporate guarantee is under RC? See, you need to first understand the term what is corporate guarantee, and then we will together decide whether it is under RC. So, what is the corporate guarantee? So, corporate guarantee is, let us say, a company, a newly started company, wants a loan. So, it goes to the bank, but the bank says, sorry, you are a new company. You have just started your operations. You don't have your financials of past years because you are a new company. So we cannot give you loan directly. Yes, but if you get me a guarantee, I can give you loan. Now, guarantee of whom? One, either of some other big company which is in existence. Now, many times what happens, this company is a subsidiary of some big company. In that case, the big company, if it is standing guarantee for you, fine. Or even if, let us say, this is not a subsidiary, it is on its own, but the directors of the companies are influential persons. they are having good credit worthiness and good credit standing. So in such cases, the bank says, okay, you can get me the personal guarantees of your directors. So it is very common that in such cases, the directors of the company gives personal guarantee on behalf of the company. Now, the point where personal guarantees are given by the director to the bank so that the bank gives loan to the company, that is what is called as corporate guarantee. And here the person giving the guarantee is director. Now the question that rose is that when a director is standing as a guarantee for the company, is the director doing some favor for the company? And if yes, then whether this will be a service taxable. So you have to first determine whether the act of the director giving guarantee for the company is any type of benefit given by the director to the company. Is it a service? First point is that. Then we will proceed to determine RCM or no RCM. So students, what do you think? Whether there is a service given by director to the company when the director stands as a guarantee. Students, so I've explained you what is corporate guarantee. Okay. Guram, again, you are mixing two things. See, even though, firstly, it is not necessary the director will always be an employee. Correct, na? So director may or may not be an employee. We just discuss the director related clarification. So only where the director is employee, then the question of Schedule 3 comes. Secondly, if the director is not an employee, then what? Will it still be Schedule 3? Answer is no. Correct, na? Because the director may be an independent director, not on the payroll of the company. Then what? Yes. So students, let me inform you. Presently, the department has issued a circular by which they have assumed the valuation to be 1%. So whatever is the loan extended, the circular says you have to deem 1% of the loan amount is the value of this fees, which is the corporate guarantee fees, and they are assuming it to be taxable. Understand this. This matter is presently under big dispute with the courts. Maybe in next 2 to 3 years, you may get some judgment on this. The main dispute is whether the act of director standing as a guarantor for its company, is there any service at all? Now again, Gurram, it will not matter whether this particular director is an employee or not, because the first question is there any service involved where the director of the company is standing as a guarantor? Now that will be decided by the courts. But as of now, since the department is following a circular of CBIC, which has assumed the value of this service to be 1%. So the circular is assuming it is a service and the value it has kept as 1%. This you study in the valuation chapter. When we go to that chapter, this circular will be studying. So there is presently tax being levied. Now coming to your question, whether it will be under RCM. Now go back to the RCM entry of director. Again, what does the RCM entry covers? RCM entry covers only that service of the director which is falling in the category of director service. What is director service? The service of director is running and managing the company. Now, you have to tell me that how you are treating this particular disputed service. So I am saying disputed service because presently there is no confirmation by the court. Courts have put a stay on the recovery of the tax wherever the companies have gone into the courts. So this particular service is right now disputed service, but still, even if we for the time being consider it as a service, the question is whether standing as a guarantor is a part of director service. I believe no. Correct? Ravinder has asked a question, gives some light on RCM service by transport. So we have been discussing that only, right, from morning and even in the previous class. So there are two types of transports, GTA, that is goods transport, and passenger transport. And both are under RCM, subject to some conditions. In case of goods transport, the main conditions are who is your recipient, whether the recipient is a specified recipient, point number one, and then you have to check that it should not be falling in the exemption list, point number two. And once you are satisfying both these things, then the third condition is that the supplier, that is the transporter, should not have opted for FCA. If all these conditions are satisfied, goods transport is under RCA. Similarly, for passenger transport, we saw today that the supplier should be other than company, recipient should be company, and again, supplier should have not opted for levying GST at the rate of 18%. When all these conditions are satisfied, the service of renting of motor vehicle, not passenger transport, renting of motor vehicle is under RCM. Passenger transport is not under RCM. Again, the second question you've asked is metal scrap dealer. Again, Ravinder, if you remember in our previous class, when we were dealing with the RCM list of goods, the last entry in that is of metal scrap dealer. So wherever a metal scrap dealer is supplying to a registered business, then that is under RCM. Yes, Gurram, you're right. Correct, Ravinder? No problem. Great. Students, tell me any particular question, maybe related to GST directly, or maybe a generic question on studies. Yes, anybody would like to raise any query, question? No queries? Super. Okay, Gurram is asking, sir, hire a car by company to Ola Uber. Who will pay GST? That is what is our next point, 9.5. So it is covered in 9.5, Gurram. What you said, Radha, I did not get your point. Yes, Ravinder. Sir, you perplexed of the sequence we went through the supply of GST. You can provide for the same. So Radha, I'm not getting, is this a question or you are saying something? Radha, I did not get your point, beta. Radha, somehow I'm not able to understand what you exactly want to say or what you're asking. Actually, I'm not able to understand what exactly you are asking. You can reframe your question, Radha. I will answer it once I understand. Now, students, in the charging section, you have another subsection 5. Now, what we have understood till now, the charging section provides that either the supplier pays the tax, which we are calling as forward charge. Second is the recipient pays tax in case of some notified services, which is we call as reverse charge. Now, subsection 5 has brought a third concept. What is the third concept? It is saying that for some notified services, now interestingly, 9.5 does not apply to goods, it is only covering services. So for some notified supplies of services, the tax is payable neither by the supplier nor by the recipient, but by a third person called as the ECO. Now, who is an ECO? So nowadays, we are availing the facilities of apps. So let us say you want to travel somewhere, you want to book a hotel, you go to different apps, Make My Trip, Agoda, and so many apps are there. Similarly, you want to travel to a place, maybe within the city, and you want to book a cab. You go to a particular app, Ola, Uber, Rapido. These all apps, understand one thing, are themselves not providing the service. They are only connecting the supplier of the service with you. You are the recipient of the service. Correct? Now, the point is that wherever the supplier of the service is getting connected to the recipient of the service through an app, so the app itself is not the supplier. Please be clear. We will not cover those apps in the definition of electronic commerce operator who are themselves the supplier. So what I mean is, let us say I want to book Taj Hotels in Mumbai. Now, if I'm directly going to the website of Taj Hotel, so there is a website of Taj Hotel also. And on the Taj Hotel website, I'm booking the Taj Hotel room. Here, the website, the app of Taj Hotel is not called as ECO. So it is not that every website or every app is an ECO. Those websites, those apps, which are only playing the role of connectors, connecting the supplier of the service with the recipient of the service. Only those apps are called as ECO. Now remember one thing, ECO apps can be for supply of goods also and supply of service also. Like for goods, we have so many apps who are acting as ECO. You have Flipkart, you have Amazon, you have, what is that one more? I think I'm forgetting the name. Misho, so many apps. Now in these cases again, all these apps are ECO. Why? Because they are themselves not the supplier. Supplier is somebody else. Now, pay attention. The point is that, yes, Mintra, rather, I was forgetting the name. So, here we are first understanding what is e-commerce operator, ECO. I'm sure you have understood that. And in 9.5 and 5.5, we are not talking about all the ECOs because we are only talking about ECOs who are connecting you with the service provider, and that too service provider of notified services. Now what does section 9.5 and 5.5 broadly says? It says that again the government is given the power to specify some category of services only where the tax will be paid on those services not by the supplier, not by the recipient, but by the app. So 91, 9394 and 95. In these three sections, there are three persons who are required to make the payment of tax. One, supplier; second, recipient; and now the third is the app. So for the notified services, the app will be complying with the GST. Now, interesting point is the provision says we will treat as if, now this is interesting, we will treat as if this ECO is the supplier of the service. So see, ECO is neither supplier nor recipient, correct? Supplier is the actual hotel, supplier is the actual cab owner, and recipient are we common public. So ECO is neither of this. ECO is a third person who is only playing the role of a connector. But 9.5 and parallelly 5.5, if you read, both are saying the same thing. We will treat this electronic commerce operator, we will deem this person to be a supplier. So 9555 says that whenever some notified services, not all, are supplied through an app, the app is the ECO, and for these notified services, the tax will be payable by the app. Now, the proviso says that whenever the e-commerce operator is not having physical presence in India, then they will have to appoint a person who will be representing them in India, and we will be collecting the tax from that person. Further, if you are not having any representative in India and you are not even appointing a person, then there will be a problem. You will not be allowed to operate in India. So either you have a person or you shall appoint a person. So this is very important. Why? Because many of these apps, students, I'm sure you all would be knowing, are non-Indian apps. They are foreign apps. Now, if an app is operating from a foreign country, and here in 9.5 and 5.5, we are asking the app to pay the tax, there is a possibility that tomorrow the app person may decide not to pay the tax. In such cases, how will we recover the tax? Now, our jurisdiction of our police, our courts, our taxation authorities is limited to territory of India. Now, if the foreign apps are not present in India, they are being operated, they are being run from US or from any of the other countries, how will you control them? So this 9.5 and 5.5 both have asked specifically that firstly, you have a physical presence in India, problem solved. If you're not having physical presence, then you should appoint a person who will be representing you so that we can catch hold of that person. Like recently, there is a issue going on, if I'm not mistaken, I think with Meta. Now, we all know WhatsApp, Meta, Facebook, these are not Indian apps. These are foreign apps. We all are using them for our day-to-day communication and postings. Now, presently, there is an issue going on. And since the government wants to take action, how it is taking action? It is making the Indian CEO of this app liable and responsible for that issue, right? I'm sure you all would be knowing what the issue is going on relating to that. So what the government does, that all these foreign apps, whichever want to operate in India, that is, they want to provide their services and facilities to Indians, they either have to have their physical presence in India, but many times these apps do not have their physical presence, not required, then they have to appoint a person. So like as I said, there is a CEO appointed for Meta in India. And for the present issue, which is not a taxation issue, it is a different issue, there is action comprehended against this person in India. So this is how a government is regulating these foreign apps. See, IP address the government has. So what is the last option? Like how we banned some Chinese app few years ago. If these apps are not complying with our conditions and all these provisions, they will simply block that app. That is what the last resort is. But government do not want to block them. Government wants that these apps operate, because as Indians we require these apps for our so many facilities and services. But in order that tomorrow if something goes wrong, like right now the Meta issue, the government wants someone on whom the government can take the actions. That is why this particular provision is there in all the other acts also, wherever it is having anything relating to apps. Now, so in a nutshell, what this 5.5 and 9.5 is doing, it is creating the liability on the apps. And it is saying that these apps will be liable to pay the tax on some notified services which are supplied through these apps. Now, the list of notified services is this, and very recently, there is an amendment in the list. So let us understand what are these services covered. So first service covered is passenger transport. So somebody was asking me just few minutes before about Ola, Uber. So all these Ola, Uber, Rapido, all these apps, the services which is provided through these apps, the tax is payable by the app and not by the taxi operator. Yes, Gurram. Second, again, transportation of service, but now by omnibus. So nowadays, for long distance travel of the entire family, you even book omnibus through apps, and there are separate apps for omnibus. So they are also covered. Then third is where you want to stay in a hotel and you are booking a hotel. Now, hotel, inns, guest houses, clubs, campsites, etc., or any commercial place which is meant for residential or lodging purposes. So the third service, rather you can say technically this is the second, because first and second both are passenger transport. The second is hotel accommodation. But in hotel accommodation, there is an important point that the hotel should not be already covered under GST. So this case is having an exception that the hotel should already not be covered. So what it is saying, except where the person supplying such service, so I will write over here hotel, is already not liable for registration. Because if the hotel is already liable for registration because the turnover of hotel has crossed the registration limit, then anyways, the tax can be recovered from the hotel. We don't require the app to pay the tax. So this point C and few more points later are conditional cases of 9.5. Conditional means these apps will be required to pay tax only where the hotels are not registered under GST. Then comes housekeeping services. Like you require plumber, carpenter, household, you require somebody to come and clean the sofas, somebody to come and clean the bathrooms, you want somebody for your some beauticians coming home and doing the beautician services. So for all these, again we have apps. I'm sure you all would be knowing what are the apps which are providing you plumbers, carpenters, drivers, house help. Yes, correct, Radha. So most famous app in that is Urban Clap. So again, whenever any of these services you are booking through these apps, again 9.5 covers these apps. So D cases housekeeping services, which covers so many services. And again over here, the same exception which is for hotel booking is applicable here also, that where the person who is supplying the service, like the carpenter or the uh, beautician, etc., if they are already covered under GST because they are liable for registration, in that particular case, the app will not be required to pay tax. Otherwise, the app will be paying the tax. Then comes food. Now we have specific apps through which we book food. So what you are availing through the apps is the restaurant service, right? So supply of restaurant service, again, there is an exception. Other than services, supplied by restaurant eating joints located at specified premises. Now again, when we proceed to the exemption chapter, you will understand what is a specified premise. So specified premise is that restaurant which is part of a huge hotel where the room booking amount exceeds 7,500. So we find that there are many restaurants which are part of huge hotel places, and if those hotels are having rooms whose prices are exceeding 7,500, then we call it as the specified premises. So when you are booking food from the hotels which are in the specified premises, the tax is payable by the hotel. Otherwise, for all other hotels, especially the stand-alone restaurants, which are only restaurants, in that cases, the tax will be paid by the app through which you are booking the food. Yes, Ravinder, you're right. So you have Zomato, Swiggy, etc. So Guram is asking, sir, if it means if hotel is registered, then FCM by hotel. Correct. Correct. You're right. Now coming to the amendment. Very recently, by way of this notification of 2025, which was issued in September last year. You remember, students, last year, September, there were huge changes in GST, and many people have called it as GST 2.0. Now, in that particular case, a new concept was introduced in GST, that is local delivery services. I'm sure you all will understand what is local delivery services. So you have apps like Zepto, you have apps like Porter. What are they doing? Especially Porter. So let us say within Mumbai, I want to send something. Maybe it may be some goods, it may be some documents or anything from one place to another. Or let us say, while coming from home, I forgot my laptop at home. Now, I cannot travel back and get the laptop. It will be wastage of my time. So I can book a porter whereby the porter will carry the laptop from my home and deliver it to my office or wherever I am. So this is what they have covered in local delivery. So services which you are booking through all these apps, Porter apps, Zepto apps, etc., which are only delivering you your commodity only from one place to another. That is also covered in 9.5. Again, the same exception where the person supplying this particular service is already registered under the GST law. That person will pay tax under forward charge. Otherwise, it will. Yeah, Radha, so that is always there. Na? See, you're saying the porter can do the theft of the laptop, but wherever I have used the service, that has not happened with them. So see, these are very professional. Baki anyways, we have so many examples that many of these cases, there were fraud people, there were people who, like in case of this Ola Uber also, there were cases registered around Delhi where the cab operators, they took the person to isolated place and took away their jewelry and all, but that is okay, but you cannot tag the whole service or the entire thing to be that way. So Gurram is asking, sir, Zepto, Zomato are provided similar service. One is food and another is vegetable and groceries. Then why they have classified differently? See, when you say food, what Zomato is providing beta is cooked food. And the moment it is cooked food, the category of service changes. It is restaurants. So you cannot say that it is same service, right? So when you are ordering groceries, they are bringing you the uncooked raw food. So over there, what they are providing is only the service of local transport. That is helping you bring your commodities or goods from one place to another. And when you talk about Zomato, Swiggy, what they are doing is they are bringing cooked food to you. So the nature of supply itself is changing. So students, these are the different services which are covered under 9.5. Some are compulsorily covered, some are optionally covered. Optionally means subject to some exception, right? I hope you have understood this entire point of 9.5. If anybody has any queries, questions, you may please ask. Yes, and I hope everybody's questions which you have been putting, I have covered. I have not missed anybody's question. I'm just trying to scroll back again. I think Ravinder had asked me some question. Yes, like a person filed GST 1 pay tax and the purchaser has not accepted that in 2B. Who want this tax back? What will be the procedure? Sorry, Ravinder, your question is okay. Rather, that is fine. So, Ravinder, see, if the buyer has not accepted, or in what I'm understanding, the buyer in the IMS facility has rejected your invoice, then automatically the seller will not have to pay the tax. Because once the invoice is rejected by the buyer, it is removed from the GSTR1 of the seller. Yes, Guram, you are correct. So that we will discuss in detail when we come to the returns chapter. Because if I try to explain it here, maybe others may get confused because they are not yet well versed with the return table. Anyways, it is not for the recipient. If I have to ask your question upfront, it is not for the recipient because 3B is always filed by the suppliers or the e-commerce operator, not by the recipient. Correct? Okay, student, just give me a minute. We have completed this part. Now we'll go to the next part, that is classification. Just in a minute, please. Okay, now moving ahead, the next point of deliberation is classification. Now, students, what is this classification? So let me tell you an important aspect. So in customs, when you study the Customs Act, you'll find a separate chapter on classification and you understand the classification entire process in detail. But we need to understand in brief here also. So customs, which is dealing with international trade related taxes like import duty, export duty, when it started expanding, there was a problem that was faced. What was the problem? Now, here what I'm telling you, the problem is not related to the language. So let us say all are using English language only, different countries. But the challenge was that within English also, so within English also, there are different meanings to the same term used. Like if I say slipper, now we know in India, slipper means what? It is a type of a footwear. It is a chappal. But this same word slippers in Japan is used for roof, which is slippery so that there is no water being accumulated over the roof during rainy season. So what I'm trying to tell you is you'll have n number of such examples, like another interesting word, bill or plural bills. Now again, students, interestingly, when we are using this word bill or bills, one meaning of this for many of us is invoice. So in India, when you say I want bill, so basically what you are referring to is invoice. Another meaning, if you ask this to a student doing UPSC or a student who is not a commerce student mainly and who is into some legal field, he will say bill means the bill which is introduced in the parliament which becomes an act. And the third meaning, if you ask an American or if you use the word bill over there, what they mean by bill over there is their currency, is their dollar. So again, the same English word has multiple meanings. Now, what I'm trying to tell you from all these examples is that when the world started trading with one another, so one country was sending goods, the other was receiving goods. Now, both countries had their customs office, and both countries' customs office were, you can say, assessing the goods for deciding whether customs will be applicable or not. And what at one side export, another side import. Now, the problem that was identified was that when international state trade started to grow, the problem was identifying the goods with their names. So I will write in my invoice that what I'm sending to you is slippers, because as per me, slipper means the footwear which I'm selling to you. But in your country, the same word slipper may have some other meaning. It may be representing some other goods, other commodities. This was creating a lot of problem in international trade. And then every time the boxes, the packages need to be opened up, they had to be uh, torn off so that you can actually see what is inside. But this was creating a lot of problem. So WCO, World Customs Organization, which is a body made to keep an overview of the international trade alongside WTO. I'm sure you have heard WTO. So alongside WTO, this World Custom Organization body was created to regulate the problems in international trade. So this particular WCO decided that we will come with a list of standardized names. And what they did was they made a list putting down names of goods, which was standardized. And they then asked all the countries to use this list in their customs. And they asked them that you kindly ask your businesses to now use these names. Now, as we shifted from manual to computerized, they also further added some code numbers to these names. Because as you know, computers are more comfortable with the codes. So one is the names given to different goods and one is the code number given to different goods. Now this list which I'm saying is is running in lakhs because there are so many goods in which international trade happens. So they have created this list. Yes, Radha, you are correct. And this list has lakhs of names. This common names is called as HSN, Harmonized System of Nomenclature. Nomenclature means names. So they have brought a standardized system and they have given you standardized names. Now, since these are lakhs of names, this list is divided into sections and chapters. So let us say first 10 chapters will be called as section 1. Next 8 chapters will be called as section 2 and so on. So there are total 98 chapters and these 98 chapters are covered in 21 sections. Like how you will see our module also is dividing it into sections. So we have section 1, section 2, section 3, and every section has some number of chapters. So similar chapters are grouped together and called as a section. So this entire list, which is having lakhs of names of goods, is divided into 98 chapters and then few chapters grouped into one section. Again, few chapters grouped into another section. So all these 98 chapters are grouped into 21 sections. So all these names are in different HSN codes. So let us call them as entries because they call it as the entry. So every name is called as an entry. So there are lakhs of entries which are broken up or which are divided into 98 chapters, and 98 chapters are further classified into 21 sections. Now, when today you are doing business and let us say you want to export your goods. Now, before export, you have to find out both these things. So now you cannot say slippers. You will have to find out what exactly the slippers will be called in this HSN and what is the HSN code. So what is the name and what is the code? And you have to compulsorily use that only in your invoice so that international trade is smoothened. Plus, why this standardized names and codes are used so that tomorrow, if the international this WCO wants to publish a data, it can publish. You see, for agriculture things, this much is the quantum of the international trade. This is in so many billions, trillions. Similarly, for petroleum, this much is the quantum, and etc. So they also want statistics for all their various planning and decision making. So all that is made simplified by the use of this HSN. Now, what is our challenge? The challenge is I have to find out where is my product fitting in this entire scheme. I want to know the exact name, the exact code number of my product. But for that, I'll have to first find out of 21 in which section my product will fall. Within that section, in which chapter my product will fall, and then within that chapter, because each chapter will also have thousands of names, exactly in which entry my product will fall. So finding out where exactly your product is falling, where exactly your product is fitting in this whole HSN list is what is called as classification. So classifying is basically identifying the exact chapter number, the exact entry number to find out the exact name and the code number which you have to apply. Now, as I said, all this system of HSN started with customs. From customs, so we first brought it in customs law. From there, we applied it to excise law. So our excise law, the old Excise Act, was also having the same list, same HSN in their act also. So that right at the manufacturing stage, you classify and decide what is the international terminology used for your goods and the HSN code, and we use that within the country also. And now, after introduction of GST, Again, we are following the same customs list in GST also, but in GST, we have added some entries. So the number of entries which are there in the customs list is expanded because within India, we have multiple variations. Like even in pickles, we have multiple types of pickles. So internationally, pickles would be only pickles. There will be only one name and one entry for pickles. But within India, we may further extend the name pickles into mango-based pickle, lemon-based pickle, and so on. Because if we want the different GST rates, we will further classify and subclassify it. So we have adopted the customs list, and to that we have added some more entries, that is some more sub classifications. Now, what is classification? So it is basically identifying. What identifying? The chapter, the heading, the subheading, and finally the tariff item in which your goods will fall, so that you can find out the exact HSN name, exact HSN code, and that you will be using in all the invoices. And now, even within India, all our statistics which are drawn using this HSN code, so that it becomes easy to collect the data. So if we look at the HSN for goods, as we see on the top, you have sections. Within sections, you have chapter. In each chapter, you will have a heading. Every heading may have a subheading. And then within the subheading, you will have the final name of your commodity. So this is how you have to step by step keep on identifying. So first identify in which section out of 21 your goods will fall. Second, within that section, in which chapter. Then you identify the chapter, then within the chapter, which heading, which subheading, and within that subheading, finally, which is the main entry or the tariff item in which your goods can be fit in. This is the process of classification. So again, what I just explained you here is repeated here. So HSN made by the international, this body is of 6 digit. So the HSN code is having 6 digits internationally. But in India, we have extended the number of digits. Why? Because as I said, within the category of pickle also we have sub classifications. So for doing that, we have added 2 more digits. So our internal HSN code is of 8 digits. Internationally, the HSN code is of 6 digits. Now, how to classify in which chapter, which heading your goods will fit in? For that, the customs have made rules. These rules are the guidelines which you follow, and following the guidelines, following the different rules, there are total 6 rules over there. You will determine where exactly your goods are falling. We will study these rules in detail, all the 6 rules, when you will study the customs chapter of classification, which is part of the 4th module. So that will come later. So right now in GST, you are not required to separately learn the rules, because the rules are copy paste borrowed from the customs rules. So the same rules which are used in customs for their classification, the same rules we are going to apply in GST, because we have adopted their classification and only added some sub classification. These rules are called as General Rules of Interpretation, GIR. Fine. Now, interestingly, our GST has services also. Now, when we were following customs and excise, we were copy paste following the international organization. And as I said, in international organizations, this HSN, there are 98 chapters, all covering goods. Now, when we moved on to GST, what we did was, from customs, we took the 98 chapters, that is, I will say 1 to 98 chapters, and we also covered all our goods in that. Rather, we copy pasted their chapters only and just added more entries. But now since GST also covers services, I wanted to have same classification for services. So I use the last chapter, 99 chapter, and we dedicated the 99th chapter entirely for services. So interestingly, 1 to 98 chapters covers goods, 99th chapter covers services. That is why whenever you will see the HSN code, if you are buying goods, you will find the code between 01 to 98 only. Correct? Because it is borrowed from the customs HSN, which is of these 98 chapters. And when you'll see the HSN code for service, which is also called as SAC, Service Accounting Code, that will always start with 99. So goods, when you are buying, check the invoice. You will find the first two digits, the HSN code, between 01 to 98. And whenever you will take a service, the invoice of the service will always have the first two digits as 99, because there is only one chapter left which is given to the service. So within service, now there is only one chapter, so it is opposite of goods. So within that one chapter, which is the 99th chapter, we have made sections. Why? Because again, services are of different categories. So you may have services of construction. So like you will see section 5 construction service, section 6 covering some other services of trade, accommodation, food, beverage, transport, gas, electricity. So all our common use services. Then section 7 covers financial and other services. Then section 8 covers business and production services. Section 9 covers community, social and personal services and other miscellaneous services. So within one chapter, which is the 99th chapter, we have created multiple sections. So all services that are going on presently in this economy, in this world, are categorized into 9 sections. Now, each section is again having various headings. Under each headings, you have subheadings which are called as groups. And then under each group, that is subheading, you have the names of your services. So here, only one chapter, that chapter divided into different sections, each section having headings, subheadings, and under each subheading, you have the final service. So this is how the service classification is done. Interestingly, this is done only in India. Internationally, they are only having goods classification from chapter 1 to 98. For services, we have taken the last chapter, which is the 99th chapter. And in that, we have created the entire services schedule, which is comprising of main chapter, then sections in that chapter, each section having headings, each headings having subheadings, and every subheading having the list of services covered in that subheading. So this is how classification of service is happening. So a new scheme of classification has been devised under GST. It is a modified version of the United Nations Central Product Classification. Under this scheme, the services of different descriptions are classified under sections, headings, and subheadings. And we have only one chapter, because up to 98 you have goods. So 99th chapter we have allocated for services. So Gurram, you are saying, sir, it means there is no service kind of supply. Means what do you mean by this question, Gurram? Sir, it means that there is no service kind of supply. Means what? I did not get this point. Okay, so Radha is saying maybe Gurram wants to say that there is no classification of service internationally. Yeah, so see, internationally, you cannot say there is no classification of service. Internationally, the United Nations has something called as Central Product Classification. So in that, they are covering services also. So there is one customs classification which is covering only goods, and the other you have this United Nations classification which is called as Central Product Classification, which is classifying services also. Correct? I hope this point of classification is understood by all. So we take a break over here. After the break, we go to a very interesting point in GST, that is composition scheme. So let us have a break. So let me check. Thank you, Ravinder, for your kind words. Thank you. Okay. Now we have something called as composition scheme. Now in the previous chapter, we studied section 8, which was dealing with tax treatment of composite supply and mixed supply. Now the interesting point is that there is a difference between composite supply concept and composition levy. So let us first understand what basically is this composition levy. Now, when you study the registration chapter, over there you will see that there is limits given for turnover. If your annual turnover of a business cross that limit, you become leviable to GST and also you become liable to get registered. Now the limits are 40 lakhs in case your supply is exclusively of goods in some states. Then you have a common limit of 20 lakhs where you are in the business of goods or services or both. And in some special category states, the limit is also as low as 10 lakhs. Now, when you see this, you will find that these limits in today's scenario are very low, because of which it may happen that you very easily cross these limits. Now, the moment you cross these limits, what is happening is you are in the GST bracket, you become liable to register, you become liable for all the GST procedures and provisions. Now, this is where the entire problem starts. Let us take a very simple practical example. I am a grocery shop owner. I have a grocery shop in my locality and my business turnover is 55 lakhs. Now, since I've crossed 40 lakhs and in my state the limit for supplier of goods exclusively is 40 lakhs, so I get covered under GST. Now, I have simply crossed the limit by few lakhs. I am liable for firstly taking registration, maintaining detailed books of accounts, having each and every invoice given to my customers, then uploading the invoices in GSTR1, finding out what is eligible ITC, taking the ITC by following all the strict provisions of ITC, and finally discharging the tax. Now, for taking this ITC, you have the new concept which you'll study in returns, which is IMS, where I have to go and check whether each and every purchase bill has been reported by my suppliers and whether it is completely correct, and then only I should accept it. Now, these compliances are very burdensome for a small business. Further, since my business is small, maybe in this 55 lakhs business, my profit would be hardly 3, 4, 5 lakhs. It is not possible for me, one, to have a proper software which will do all my accounting and GST work. Second, it may not be also feasible for me to hire a professional and pay the fees of the professional who will do my monthly compliance. Now, all this was very, you can say, constrained for a small business. And please keep in mind, students, whenever a law is made, the lawmakers always work on one very important thing in law, that is the practical implication. Now, when you look at the law from this angle, that is the practical implication, you will realize that the law is not made only on paper. It has to be made in such a fashion that it can be practically implemented only then people will follow the law. If the law is very rigid, it is not possible to practically implement the law. In that particular case, there is a possibility that people will evade the tax. Considering the same thing, if you observe Income Tax Act, we have similar concept in Income Tax Act where we have your section 44 ADAF. I'm talking about the old Income Tax Act 1961 sections. So in these also you have a concept of presumptive income, whereby these sections which are applicable to different types of businesses and 44 AD is applicable to professionals say that you need not do the detailed computation of income tax. Simply, whatever is your turnover, you multiplied by a specific percentage, that will be deemed to be your final PGBP income, net profit of that business. So, as you have seen, that even in income tax law, they have a similar concept. Now, on those lines, where income tax law calls it as presumptive scheme of taxation, we are calling it as composition scheme or composition levy. So this composition scheme, this composition levy has a very important place in businesses, because you will find that majority of the businesses which you see day to day around you are all falling, or you can say are eligible for this particular composition scheme. Now, what is a composition scheme or what is a composition levy? Students, it is an alternative method which is given to small businesses whose turnover is not exceeding a particular limit. And the most important part, what is the benefit of this scheme is reduced compliance and simplified GST computation. Now, we all like the concept of ITC in GST. That is, whatever taxes I have paid on my purchase side, I will get it as a deduction from my output tax. So to that extent, my output tax will reduce. So it is very soothing to think that yes, I have ITC and I will use the ITC and my output liability will reduce. But let me tell you, students, when you study the ITC chapter, you will realize that taking ITC in itself is a huge, huge risk today, because there are so many restrictions, there are so many conditions in that ITC that if you make even one small mistake or if you are not able to comply with one small condition, in future, the department may come back to you and ask you to reverse the ITC and also pay interest and penalty. So it may be more costlier for you. Now, considering all these complications in the GST law, the composition scheme becomes very, very significant, very, very important. Now, this composition scheme is drafted in section 10 bracket 1. If I have to first tell you what is exactly the benefit of this scheme is, so what the scheme has done is it has made the tax payment simplified, the tax computation and payment simplified. How? It has categorized the businesses into the categories like manufacturers, then people who are engaged in restaurant or catering service, which is dealing with supply of food, and then any other. So basically, it will cover your traders. Now, what is the best part? On similar lines of our income tax law, where they have made a presumptive scheme whereby they will be computing your PGBP income on a presumptive basis, which will be turnover multiplied by a rate. Similarly, here also, they have made a simplified scheme that a manufacturer who is fitting in this scheme, when you will fit, that we will see on the basis of turnover and other requirements. So once you are fitting in the scheme, the CGST Act says you have to pay 0.5% CGST. In other words, your total tax is 1% off. Similarly, if you're in restaurant, your total tax is 5% off. total turnover. And if you're a trader, your tax is again 1%, but it is not of total turnover, it is only of taxable turnover. So excluding the exempt items, but that is not the case in first two. In first two cases, the percentage has to be multiplied by total turnover, including exempt item. Now, students, first understand the biggest relief. What is the biggest relief? The biggest relief is that in case you are eligible for this composition scheme, you need not do detailed calculation. What is detailed calculation? Like you may be, for example, as I gave you example that I'm running a grocery shop. I will be having 500 items in my shop, having different rates of GST. I need not fall into those complications. For me, my tax will be simply 1% of the taxable turnover. Only what I have to do is I have to make a bifurcation of out of my total turnover, how much is of taxable goods and how much is of exempt goods. Simply, I have to do 1%. So first simplification is I need not identify each goods rate. I need not find out what is the independent rate of each goods. Now this will simplify my tax computation also, and this will simplify my invoice preparation also, because my invoice will be prepared simply by taking the total turnover. That is, I'll simply list down all the items. That's it. There will be no independent classification of different items. First simplification. Second, as I was saying, it appears very soothing that okay, whatever taxes I've paid on my input side, I will get ITC, it will be reduced from my output tax. But that is today what is creating the biggest litigation, because even if out of my multiple supplier, any one supplier makes a default on their side, I will be penalized in future because I will get the GST notice. I will be asked to reverse the ITC, pay interest, pay penalty, and that will unnecessarily be a burden and headache for me. Now, this is completely gone in composition, because in composition, you don't have to find out the actual output rate. You are not subtracting the ITC because the composition says don't take ITC. But instead, what they have done is they have simplified your calculation by giving a lower rate. Now, see, 1%, 5% is a very low rate. So, what they have done, they have simply given you a lower rate of 1%. And of this 1%, when you apply, everything is done. So, no separate classification of your goods, no ITC complications. Even your invoicing will be simple because you need not show separate GST rates in the invoice. So what this scheme aims at is reducing the compliance burden, reducing the complications which the GST is bringing along with it, and making the scheme simple and, most important, for a small businessman to comply with the scheme without even the use of any costly software, or maybe hiring a professional, which may not be possible for them. Sir, any taxpayer can avail composition. Yes, that is what we are now going to see, Gaurav. We are going to see the conditions, but what you are saying is right. We will see the turnover limits, and as per the turnover, we will be deciding who is eligible, plus further on the basis of the nature of their business. That we are going to see. But what I thought is I'll first show you the main difference or the main benefit, that how this composition scheme is going to be simplified. Correct? Now, when the composition scheme started, in 1st July 2017, that is when the law was introduced, we had only one category of composition, the table which I just showed, which covered manufacturers, which covered traders, that is both are for goods, and for service, it covered only one service, that is the restaurant and catering service. This is the composition scheme given under the subsections 1 and 2 of section 10. However, over a period, it was identified that Even there are multiple services, like you have a salon around you, you have people who come to your home to do your beautification service. So there are so many small services. You have the laundry around you. So there are so many service providers around you, coaching classes you have, right? They were unnecessarily getting trapped in the GST clutches, and even they were having small businesses. So later on, this scheme was extended by introducing another subsection 2A, which exclusively dealt with the service suppliers. So now you have two composition schemes. The original one, which is covering all goods supplier like manufacturer and traders, and only one service supplier, and another scheme under subsection 2A, which covers all the remaining businesses who are not covered in the first scheme. Now, normally this first scheme, normally people are referring to as goods composition scheme, though the law has not given any such word. And the second composition scheme, people refer to it as service composition scheme. Correct? Now, as we saw, this goods composition scheme is having 1% total GST rate C plus S, and this goods composition scheme where it is providing for restaurant and catering, it is having the 5% rate. Now, what is the turnover limit? So if your turnover in the preceding financial year is not exceeding 1.5 crore, then in the current financial year, up to 1.5 crore turnover, you can avail composition. Now, this limit is applicable to the goods composition people, that is manufacturer and traders, plus one service composition, that is restaurant and catering. So this is the first composition scheme which applied to these three categories of persons, right? Now, as I said, after that, another composition scheme was introduced later after a year, rather you can say around 1.5 years, which is under subsection 2A, and people call it as service composition scheme. So basically it will cover your salon, your tailors, your coaching classes and all. And here the GST is levied at a lower rate of 6%, and the turnover limit for eligibility is 50 lakhs. So here for all services combined, there is one rate which is 6%, and the turnover limit is 50 lakhs. Now, another interesting point is that both these composition scheme people are given relaxation in all the procedural compliances also. Like a regular scheme person will have to prepare a detailed invoice showing each and every commodity separately with their GST rates. However, here you will not be required to do classification. Why? Because all your goods, all your services are at a single rate, and instead of preparing tax invoice, you will prepare a bill of supply. What is important to be noted, students, is that in case of composition scheme, you are not allowed to collect tax from your customer. So this 1%, 5%, 6%, whatever is the composition GST rate, that you cannot add in your bill and collect separately. So you are required to make a consolidated bill without showing separately the tax component. So in other words, this 1%, 5%, 6%, you have to pay out of your pocket, or you can add it in the price and you can inflate the price if that is possible, but you cannot charge separately in your invoice. And that is why what you are giving is not a tax invoice. What you are giving is a bill of supply. Fine. Now, the persons who are eligible for this composition scheme, the best part is that these persons are not required to pay regular tax on each and every invoice. Rather, they will pay a lower tax at the prescribed percentage. Further, they have to deposit this tax every quarter using a form CMP-08. What is very important is they don't have to file any returns monthly or quarterly. They will file one single return, which is annually. So again, so much of relaxation. What is the relaxation? That you need not file monthly returns, quarterly returns. You can file a single return. Okay. So you will be filing a single return, which is for the entire year. Correct? Now, these provisions we now understand in detail in our coming part. So first composition is 10 bracket 1, 10 bracket 2. Second composition is 10 bracket 2A. Now, let us go to each of these in detail. Now, first is the turnover point. Now, we have seen the turnover limit is 1.5 CR for the first composition scheme persons, and for the second composition scheme persons, it is 50 lakhs. However, when you read the Bare Act, in the Bare Act, you find 50 lakhs in the first composition scheme. But that is because when originally the law was made, the composition limit, the original composition limit was kept as 50 lakhs. However, today it has been raised to 1.5 crores, which may be in future raised further. But today the limit is 1.5 crores. I'm talking about the first composition applicable to manufacturer, traders, and one service only, that is restaurant catering. Further, if you are in special category states, the limit is lower, it is 75 lakhs. Now, what are the special category states? So as per Constitution, these are the 8 states which are termed as special category states. However, let me remind you, when you study the registration chapter over there, also you realize that these states are given a lower turnover limit even for registration. However, they are given the choice that if they want, they can come to the regular limit. So out of these states, the states of Assam, Himachal, Jammu and Kashmir, these states have opted for the normal composition limit. So they are in 1.5 CR and not 75 lakhs. Similarly, when you will find the registration limit, which is 20 lakhs, and for special category states, 10 lakhs, many of these special category states, instead of 10 lakhs, have opted for 20 lakhs limit. So now the position is that the aggregate turnover for a supplier to be eligible for the first composition scheme, other than the special category states, is 1.5 crore. Within special category states, these special category states have also opted for 1.5 crores only. Now, the question is how to determine this turnover. Students, you have to keep in mind that wherever any turnover limit is prescribed, whether it is for registration, whether it is for composition, whether it is for e-invoicing, whether it is for QR code, for any provision under the GST law, 99C applicability, quarterly returns applicability, everywhere, wherever a limit is prescribed and the provision is based on limit, in that particular case, a common point is that you have to consider the limit on pan-India basis. So the point is that wherever you are checking a limit for the purpose of applicability of any provision of the GST law, the limit is always to be checked pan-India. Right? Pan-India means if you have multiple businesses in different states, even though the states may be having different registrations under GST, which is compulsory, still you will be applying these limits by taking your limit as total of all states registration combined. That is, you have to take the pan India limit. For the second composition, which is under subsection 2A, which is also referred to as service composition, as we have seen, the limit is 50 lakhs and there is no amendment in that. So two limits for regular composition 1.5 CR and 75 lakhs, and for service composition it is 50 lakhs. Now keep in mind, students, that we have to first see the limit of the last year. So if last year your turnover was within this limit, then in this year you are eligible for the composition scheme. Then again in this year, you start with the composition scheme from 1st April, and during the year, whenever your turnover reaches this limit, thereafter you will become a regular dealer. Composition scheme will automatically end. So that you have to keep in mind. For eligibility, you take the turnover of last year to determine whether you are eligible in this year or not. And once you find you are eligible, then in this year, what you have to do is you have to apply the limit from day one, and the date, the day or the date on which your limit is getting exhausted, you will simply do what? You will change to the regular scheme. Now, while computing this aggregate turnover, what will be counted in aggregate turnover? The answer is your entire outward supplies. So whether it may be taxable, exempt, export, interstate, all your outward supplies will be counted. What will not be counted is your inward supply. So many times you are liable to pay tax under RCM on your inward side. Don't count that. And whatever taxes you are paying, that will also not be counted. It means the turnover is to be taken on the value of your transactions before the GST component. So you have to take the pre-GST value. And last point is, it is to be taken on all India basis, that is PAN basis. Now, some explanations are there which are very important. The first explanation that is important is explanation 1, which clarifies that while computing this aggregate turnover of a registered person to determine the eligibility for the scheme, the aggregate turnover will include supplies from 1st April of a financial year up to the date of becoming liable for registration, and it will exclude value of exempt supply of services by way of this. In other words, when you are counting, one second. Now, this 1.5 crore limit or 50 lakh limit, which you are going to count, you will not include in that interest. Now, why this point is very significant? See, students, practically, many of these small businesses are not doing anything else except their business. Please understand this. What they are doing is they are not doing anything other than their businesses, but they may have a saving bank account. Many times individual do that, or they may have done FDs. Now on both these, they are earning interest. Now there was a challenge or a question. Now this interest is exempt, that you'll study in the exemption chapter. But the question is, while counting these limits, what we are seeing, are you required to even count the interest? Because it may happen that because of the interest component, you may cross the limit and get out of composition. So that is what is clarified, that the interest will not be included. So while counting the limit, you'll always exclude the interest. Okay. Let me go through the chat. There are multiple chats. What is GSTR 4? See, the annual return which this composition people have to file, that return is what is called as GSTR 4. So they file their return in GSTR 4. It means books of accounts maintained, then can taxpayer know at what time he has exceeded the limit? Yes. So see, you have to maintain books, because without books, it will not be able to find out what is your turnover and whether you are eligible and when you have crossed the limit. See, Radha, what is this interest part? Now the question simple is, I'll explain it like this. Now see, this is your P&L, trading P&L, correct? Now here you have sales and you have other miscellaneous items also. Every business has. Now the common thing which you will have is interest on savings bank or FD. Now, when you are counting your turnover, this is your turnover, fine. Is this also your turnover? That was the doubt, which is clarified by explanation 1, that you will not count, you will exclude this. So if you are receiving interest, that will not be covered in your turnover. Radha, this is what is the meaning. Did you get this, Radha? Perfect. So pictorially, you are given how this turnover will be counted. So all your outward supplies are to be counted, whether taxable, exempt, exports, interstate, all have to be counted, and that too on all India basis, not on state basis. Further, what will not be counted is the GST component in your turnover, inward supplies on which you are paying tax under RCM, and the value for deposits, etc., which is nothing but interest. So these things will not be counted. Correct, Guru. So what you are saying is right. As a composition dealer, I am not allowed to separately charge and collect tax. If I do that, that will be violation, and the amount will be collected from me along with interest penalty. You are right. Now, after understanding the turnover criteria, which is the most common criteria for determining your eligibility for the scheme, the next part is the rate of tax. This rate of tax, students, is given in rules 7 of the CGST rules. So what we are now studying is the rate of tax as per the rules. Now, we have already discussed that for the first composition scheme, people like manufacturer, the rate is 1% of total turnover. Then restaurant and catering service, it is 5% of total turnover. And for traders, it is 1% of total turnover. Similarly, for the second composition scheme persons, who are generally referred to as service composition scheme, it is 6%, 3 plus 3, correct? Now, next is turnover in state or turnover in union territory under composition scheme. Now again, till now we were talking about aggregate turnover. That was for deciding whether you are eligible or not. Now, once you are eligible for composition scheme, and let us say you are having businesses in 4 states, you have to take separate registration in each state. Now, while finding out the eligibility of composition scheme, you had added the turnover of all the states and found out your total turnover, which is also called as the aggregate turnover. Now, once that aggregate turnover is below the limit, you decided that you are eligible for this composition scheme. Now, every month when you are doing business, you have to compute your tax liability for each state separately, because the CMP 08 form, which you are going to file quarterly for paying the tax, that is filed for each state. So if you are registered in 4 states, you will be computing your tax for each state. Now here comes a second type of turnover, which is turnover in a state or union territory. So basically, what is turnover in state or union territory? So now, when you have to pay the tax is not paid on all India basis turnover. It is paid on the state-wise turnover. So state-wise turnover is what is defined, and it simply means Section 2, Clause 112 of the GST Act defines the turnover in state, and turnover in state simply means the aggregate of all taxable supplies, again excluding the inward supplies on which tax is payable by you, and plus the exempt supplies which you are doing from that state. This will be your turnover of a state. Now again, there is the second explanation in section 10, which clarifies that for the purpose of determining the tax payable, the expression turnover in state or union territory will not include the following. Now what it will not include? Your turnover of the business from first day of April up to the date such person is liable for registration, and value of exempt supply of services, which service again the same, which is interest. So while determining the tax liability, you don't have to pay tax for the first turnover till the date of registration. So as let us say your registration limit is 20 lakhs. So for first 20 lakhs, you will not pay turnover, no, not pay tax. Why? Because in the year in which you take registration, the first 20 lakhs turnover, which is the registration limit, is your exemption. So that is why that will be excluded. Second, again from this turnover also, interest portion will be excluded. So as I was showing here, when you are counting your turnover, now this turnover you are counting for each state to find out the tax payable in each state. Again, you will exclude interest. So in short, interest is excluded from your aggregate turnover also, which is on pan-India basis. It is excluded from your state-wise turnover also when you are computing the tax liability. So finally, what or how your turnover of a state will be counted? Again, it will cover all your outward supplies, and it will not cover the GST portion, the value of inward supplies, the value of turnover from 1st April up to the date you become liable for registration, that is when you reach the registration limit, and it will also not cover the interest. Fine, students? Okay, there are some questions. Ravinder, what is freight? See, if in your bill you have charged freight, anyways, freight is part of your bill itself. So it will be part of turnover, correct? See, but a total turnover or the turnover limit which we are discussing, firstly, while deciding whether you are eligible or not for any composition scheme, you have to see the total turnover, which will include exempt also. But now when you have to pay tax, and if you are a trader is not required to pay tax on the exempt turnover. So for trader, out of total turnover, you will take only the taxable turnover and multiply 1%. Correct, Gurram. Very correct, Gurram. This point you will come later. Great. So just give me a minute, please. GST is state-wise registration. Correct, Guram. So when you are taking registration state-wise, we will study this later now in this chapter, that there are some restrictions and conditions. So one of the condition is, if you want to opt for composition scheme in one state, while taking registration in other states, you will have to opt for the same composition. Means you cannot say that in one state I will be regular, in another state I will be composition. Correct? So you are right. Registration is to be taken state-wise, but composition has to be applied uniformly. Now, in eligibility, like we saw the turnover requirement, now there is a negative list as to who will considered as not eligible for this composition scheme. Now, in the first scheme and in the second scheme, you will find similar provisions. First, persons who are engaged in making supply of goods which are not leviable to tax. So, if you are engaged in supply of liquor, in supply of any of the 5 petroleum products, you cannot opt for composition scheme at all. Then, if you are engaged in making interstate supplies, very important, students, a composition dealer cannot make interstate supplies. So, interstate supplies will not be eligible. Next. Now, this is interesting. Supplying services through e-commerce operator is not allowed. Now, what is interesting is, as a dealer of goods, you can register yourself on e-commerce and you can supply goods through e-commerce within your state. So what is restricted is only supplying service through e-commerce, but you can very well supply goods through e-commerce. Condition is it should be within the state, because interstate is anyways restricted. Then comes another very important restriction. If you are manufacturing, one second. So if you are manufacturing, one second, students. If you are manufacturing some specific, what is happening? One second, students. Yeah. Now discussing who are not going to be eligible. In that case, certain restrictions are put. So first, you should not be engaged in supply of those items which are outside GST. Second, you cannot make interstate supply. You cannot provide services through e-commerce operator, but goods you can provide. Next, you cannot manufacture any of these items: ice cream, pan masala, tobacco, aerated water means cold drinks, fly ash bricks, fly ash aggregate, fly ash broth, bricks of fossils. So if you are manufacturing any of these items, composition is not allowed. But interestingly, only manufacturing of these items is excluded. So if you are a trader of these items, you are very much into the composition scheme, correct? So remember, only manufacturers are excluded, not traders. Then, if you are getting yourself registered under this special category of casual taxable person or non-resident taxable person, again, you will not be eligible for composition scheme. And last, in the first scheme, which is mainly made for goods, you should not be supplying service beyond a particular limit. So first category of composition scheme allows you to supply goods majorly, and hence, since it was originally formed as a goods composition scheme, you should not be engaged in supply of services. However, there was an amendment made in this whereby they said that we cannot be so rigid that service cannot be supplied at all. So later on, they amended the first composition scheme and they said that up to some value, if you are supplying services, still composition scheme will be allowed. Now, anyways, we are not talking about restaurant service because anyways, restaurant service is already covered in the first composition scheme. But other than restaurant, if you are into any other service, that service you can supply but up to a specified quantum. If your service supply is exceeding that quantum, you will not be given the benefit of composition. Keep the question and answer session for whole session. Yeah, so that is what, Guram, I am allowing you. You can ask questions anytime, no problem. No, Kanaya. So through an e-commerce operator, you cannot supply goods even within the state if you want to be in composition scheme. Sorry, I'm sorry. Goods is allowed. So a composition dealer who is supplying goods can register on e-commerce operator, and through the e-commerce operator, you can supply goods within the state. This is allowed. What is not allowed, Kanaya, is supplying services through an e-commerce operator. Correct? Yes, students. Any questions till now? Okay. Now, this is an important point for the first composition scheme, that is majorly for manufacturer traders, where it was allowed only for supply of goods, not for supply of service. An amendment was made whereby now they are saying that if you are supplier of goods, that is manufacturer or trader, you will be allowed composition scheme if you are supplying service, but that service value should not exceed. One is 10% of your turnover in that state, and second is a fixed amount 5 lakhs, whichever is higher. So let us say your turnover is 65 lakhs. So 10% of 65 lakhs is 6.5 lakhs. So if you are providing service up to 6.5 lakhs, you are still eligible for composition scheme. Let us say your turnover is 45 lakhs. 10% of this is 4.5 lakhs. Now, in this case, if you provide services up to 5 lakhs, composition scheme is allowed. So this is what this means. Fine. Understood, students, the point. So where the first composition scheme, which was made exclusively for manufacturer trader, that is supplier of goods, and only one service, that is restaurant, the government found that, like I'll again give you example of trader, especially a grocery shop. You will find that grocery shop, which is mainly dealing with supply of goods, may have some nominal services like renting. Now you'll say, sir, how renting? See, this person as an investment may have purchased a flat, a shop which it is giving on rent. So it may have a renting service. Now, original composition scheme, how it was made on 1st July 2017, it completely debarred, it completely restricted providing any service. Now, because of this, many of these composition dealers were out of the composition scheme because any supply of service was barred. So later on, this was amended to allow some marginal supply of service up to this amount limit. Now, another example of services, when you go to these uh, shopkeepers or grocery shops, you will find that outside the shop there is a huge board, but the board is carrying the logo, the board is carrying the advertisement of some brand. So maybe a Pepsi logo, or maybe the board is covering the ad of, let us say, Safola oil or any other product. Now, interestingly, a shopkeeper gives his own shop various parts for advertising other companies' products, and he gets some nominal rent, 2000, 5000 per board. So a shopkeeper is earning through these other mediums as well. Now, the original composition scheme, which completely barred supply of service, was restricting such shopkeepers from getting the benefit of composition scheme. Hence, this relaxation was provided that all these shopkeepers, if they are providing these renting service or it is advertisement or display service, up to this amount limit, their composition scheme will not be debarred. Now again, same clarification again, interest will again not be counted in this above limit of service. So above limit of service, where you are allowed to give service up to rupees 5 lakhs or 10%, in that interest will not be counted. So in short, you can simply say that interest is not counted anywhere in the entire composition scheme. First, not in the aggregate turnover. Second, not in the turnover of the state. Third, not even in this service limit of 5 lakhs. Interest is counted nowhere. So interest, you will completely exclude interest while you are doing working of a composition dealer. Fine. Now, what are some more conditions put on a composition dealer? So composition dealer is required to pay tax under RCM wherever applicable. So composition dealer is paying 1%, 5% on its outward supply. But when it comes on the inward supply, which is RCM, they will have to pay tax at the regular rate. Now, according to me, this is slightly not in line with the composition, but this is how the composition law is made. It says that we are giving you relaxation only on the outward side. On the inward side, wherever RCM is applicable, you will pay full tax. Second, which we have seen, you cannot act as CTP, NRTP. Next, very important, this composition dealer will put a board that this person is a composition taxable person, and this notice or signboard has to be displayed in his business place at a prominent location. So somewhere where anybody can see, this board should appear that you are a composition taxable person. Plus, on your invoice, which is the bill of supply, you will again write that you are a composition dealer, and you'll also write you are not eligible to collect tax from suppliers, from your customers. So on your invoice also, you have to make this declaration stating that you are a composition dealer and you cannot collect tax. Next, where stock is held by him and they are liable to be taxed under RCM, the tax thereon has been paid under RCM. So in short, RCM is applicable to the composition dealer. Now, in addition to the above conditions, a registered person who is opting for composition scheme under 10(1), that is the first composition scheme, must not be engaged in manufacture of notified goods. Now, what are these notified goods? Ice cream and other edible ice, then pan masala, tobacco and tobacco substitutes, cold drinks, fly ash bricks, fly ash aggregate, fly ash block. This is the new type of bricks used in construction. You will find that now in the new sites that red color brick is not used, a grayish color brick is used, that is this. Then bricks or fossils. Now this is the regular building bricks and earthen or roofing tiles. So these all manufacturers are not eligible for composition scheme at all. Guram, turnover interest will not be included. This is the specific exclusion given. So in entire composition scheme, anywhere, wherever you require to find out the turnover, interest will nowhere be included. Now, how will you opt for the composition scheme? Now, there are two possibilities. First, you are getting registered under GST for the very first time. So today, your turnover has crossed the 20 lakh limit mark, and now you are applying for registration. Now, when at the time of applying for registration, at that time itself, you want to apply for composition scheme, then in your registration form, which is GST REG01, in part B of this form, you have the option to tick. Over there, you will put a tick, and this tick will be considered as your intimation that you are intimating to the government that I will be acting as a composition dealer. So, first, the option for composition can be selected by you by putting a tick in the registration form. This option to pay tax under composition shall be effective from the date on which your registration becomes effective. So in this case, the day from you get registered, from that day you become a composition dealer. Second possibility is you are already registered from few years, and every year you are uh, running business. Now in the previous year you were running business as a regular dealer. Now in this year you want to work as a composition dealer. So those people who are already registered and now they are shifting to composition scheme, they have to make an application electronically. So for them, they are required to make an application in which they will write and inform to the GST portal that yes, from this new financial year, I want to work as composition dealer. Most important, this intimation has to be done before the start of the year. So up to 31st March, you should file this intimation on the portal. Otherwise, from 1st April onwards, you'll have to work as a regular dealer only. Now, what is very important is every year you are not required to give this intimation. This intimation is required only when you are earlier a regular dealer and now you are shifting to composition scheme. So only when you are shifting from regular to composition scheme, only in that case, before the start of the year, you will find this particular intimation. Further, along with the intimation, you have to also give a stock statement, which is to be given within 60 days after the commencement of the financial year. What is the purpose of this stock statement? You will study in the chapter of ITC. Guram beta, why Schedule 3? Is interest covered in Schedule 3? Yes, Guram. Is interest covered in Schedule 3? Answer is no. Interest is an exempt supply. It is not a no supply beta. So then the point is, since it is not a no supply, it is to be counted in turnover. However, only for the purpose of composition scheme, it is excluded from the counting of turnover every year. Then comes the next point. Validity of composition scheme. See students, your composition scheme remains valid till all the conditions are met. The moment any condition is not met, for example, your aggregate turnover exceeds the limit, you are out of the composition scheme. So that will be withdrawal of the composition scheme. What will be taken as the effective date of withdrawal? It will be the date which has been indicated in your intimation, or it will be the date of happening of that event which keeps you out of the composition scheme. Next, withdrawal from the composition scheme by a taxpayer who intends to withdraw. Now, what it means, you have not breached any of the condition, but you yourself want to get out of the composition scheme. Now, again, how this will happen? Again, you will have to make an application online. Again, you have to make it before the start of the financial year. So let us say this year I am working as a composition dealer, but next year I want to become a regular dealer and I'm still satisfying all the limits. So automatically I'm not becoming a regular dealer because I'm still satisfying all the limits. Then again, I'll have to make application up to 31st March of this year so that from next year I will switch to regular dealer. Next is denial of the composition scheme by the tax authorities. Now, when the tax authority will deny, when they have reasons to believe that you are not eligible for the composition scheme. Why? Because they believe that you have breached some of the condition, then they will send you a show cause notice. And after you reply to the show cause notice and after going through your reply, the officer will decide whether he is accepting your reply or not and whether you can continue in the composition scheme. In case the officer denies you the option to pay tax under composition scheme, the effective date of such denial shall be the date, including the date as may be determined by the tax authority. So from what date you will be said to be out of the composition scheme. So when the tax officer keeps you out of the composition scheme, the date will be also decided by the tax officer. Next, see, this is the point which I think Gurram had asked the question or Ravinder had asked the question, that composition is to be applied uniformly by all registered persons having the same PAN. So if you are applying for composition in one state, you will have to apply for composition in all the other states where you are registered. Again, another point, composition dealer cannot collect tax. So a composition dealer cannot charge that 1%, 5%, 6% in the invoice. Further, composition dealer is not also allowed to claim ITC. This also I mentioned at the start, that you will be paying tax on the gross sales without deducting any ITC. And then next point is imposition of penalty. So wherever you have wrongly availed the composition scheme, so you are not eligible, still you have availed, in that particular case, you will be liable to penalty. So students, this is the end of this particular entire composition scheme. Now I keep the forum open for question and answer. So Gurram is asking for exist anytime but for entry before start of the year. No. See Gurram, if you want to exit the composition scheme by your choice, then it also has to be done at the end of the year. But when you're exiting the composition scheme, automatically, because the condition is breached, that will happen automatically during the financial year also. Because you have breached the condition in the financial year, automatically you will be out of the scheme during the financial year itself. But if you have not breached any condition, you are still eligible as composition dealer and you yourself want to exit as a choice. Again, exiting or entry by choice has to be done only before the start of the financial year. No, Ravinder, beta, limit of composition, the 50 lakhs limit, the 1.5 crore limit is aggregate turnover, which means the pan-India turnover, not state-wise. Please be clear. So all limits, whatever you will study in GST are all aggregate limits, limit for the whole country and not for PAN itself. But sir, if I'm filing return end of the financial year CMP04, then how department knows I've exceeded the limit? See, please understand, Gurram, if I've exceeded the limit in between the financial year, you will have to intimate the department, and from that day, you will start filing all your returns monthly. And for the returns which was applicable for the start of the year, from the start of the year till the date you have crossed the limit, that return you will find at the end of the year in GSTR 4. So GSTR 4 you will file once a year, but your point is valid. If in between the year you have crossed the turnover or for any reason you are not eligible for the composition scheme, then you will have to intimate them by filing the intimation. And then from that day, you can start working as a regular dealer. And at the end of the year, you will file the GSTR 4 for the period for which you were composition dealer. Sir, when you use other students' query, can you please tell the bird's eye view overview of the flow of the schedule and section numbers? See, beta, I think what I'm understanding your query is, I had explained this in the chapter of supply, that how do you determine supply. So I think if you're asking that query, let me give you the flow. So the flow beta, I had explained this in the previous class also. So first step is you will determine whether you are fitting in no supply. Check for no supply. That is, check for schedule 3. Once you find that you are not in schedule 3, that is, your transaction is not fitting in the no supply list, then the second step is check the definition, which is in section 7.1. All parts A, AA, B, C. Here, when you come to 7.1C, you have to also check schedule 1. So this will help you determine whether you are liable for means your transaction will be liable to be treated as supply or not. So if you satisfy the definition under 7.1, or if you are falling in 7.1C, you are fitting in schedule 1. Now you know that you are finally a supply. The third step is do classification. Classification is determining whether what you are doing is supply of goods or supply of service. And for this, you will refer schedule 2. So Radha, I hope you are asking for this. Yes, Radha, is this exactly what you are asking? Excellent. Gurum is saying it means voluntary, but taxpayer can substitute, suppress the record. See, that people are doing. See, suppressing is very common. Wherever there is suppression, there will be action by the department whenever they will catch hold of you. So that beta, see, suppressing, you cannot stop anyone, right? So people may suppress, whenever they will be caught, action will be taken. Yes. Yes, students, let me know your queries, further queries. Yes, students. Who else is having a question? Thank you, Ravinder. Yes, students, let me know your queries. If there are no queries, I'll hand it over to Chef Ali ma'am for adding some more pointers to this session. Is Chef Ali ma'am there? But a goods and service both are liable for RC. No? In our previous class, we saw the goods list also, where natural produce were covered, where supplies by government was covered, where metal scrap was covered. But the next chapter in the sequence, chapter 3, I believe it is place of supply. Radha. Yes, students, let me know your queries, any, if any. So, Guram, I hope you got the answer. Good service, both are liable. But a renting of crane where it is covered in the RCM list, please tell me. Is renting of crane covered? Yes, Radha, thank you. Gurum, where is renting of crane covered in the RCM list? Tell me. So we have a specific RCM list, Gurum, which we saw in the previous class. See, but if supplier is not registered, that does not mean that every time supplier not registered, so recipient has to pay. No, that is only where it is specifically required in the law. So if supplier is not registered, fine. Either there will be no tax liability if the supplier is correctly not registered because the turnover is below 20 lakhs, or if supplier has suppressed the sales, that whenever in future the officer will catch hold of the person, he will make the supplier pay the tax under forward charge. But that does not mean that if supplier is not registered, then by default it will be in reverse charge. Then we were not required to make that huge list. We would have simply written where supplier is not registered. Simple. Why we would make that list? Correct, na? Yes, students. Any more questions? Yes, but that we will be doing, Kanaya. That we'll be doing very soon. Don't worry. Yes, anybody else has a query? Okay, great, great. Okay, fine, good. So, Shefali ma'am, you can take over. Yes.
Thank you, sir. And very good morning to all the students.
Good
So
morning, ma'am.
I hope after this session, they are all clear with the topics and they have got their queries also resolved. And in fact, on the screen, I have shared one link. I think a link might not be visible to the students. Maybe increase the size. Actually, it's a questionnaire because I will just show you the link. Good morning, Ravinder. So this is a link to the questionnaire which we want, or the feedback form which we want the students to fill. All the final level students are requested to fill this form. This is actually a feedback because you know that ICAI is in the process of revising its scheme of education and training. So whatever experience you have gained during all these years of your CA journey, during your articleship, whatever you feel that yes, this should be how our scheme should be improvised, or what additional features can be incorporated in the scheme. So, few questions are there in this feedback form, and if you fill this feedback form, this will come to us and it will get an idea what our students feel, how they want the scheme to be enhanced or scheme to be improvised. So please fill this form. Yes, we have pasted the link also in the chat, Radha. So I think the link is not visible. I will spell it out for you. It's HTTP CRET feedback, CRETFEEDBACK, cretfeedback.icai.org, and then the questionnaire will come. So those students who are there with us in the Zoom, we have shared the feedback link with them so that they can go to the link and share fill the feedback. As well as we'll share it in, I think we would have shared it in the WhatsApp group also with them. So in the WhatsApp group also, this link is there with you, the final WhatsApp group which is there. So there also this link is available. Please take out some time and fill this feedback form. And anybody wants to share any feedback regarding this class also, they are most welcome. Ravinder is saying, add me. Okay, Ravinder, you will be added in the WhatsApp group. Can we share the link here? We'll be sharing after, maybe in the next class, or we'll add you in the group, Ravinder. Okay. So any feedback you want to share regarding the class, you are free to share the feedback also. Okay, Radha has one request that class notes to be shared over the BOS portal or WhatsApp group because, okay. So Radha, those notes will be shared maybe by today. On the BOS portal itself, you will find those notes. Now they will not be shared in the WhatsApp group because portal has been there and portal, all the notes which you want for the class, which have been shared during the class will be uploaded in the portal. So maybe by end of the day or maybe by tomorrow, you will get all the notes which will be uploaded on the portal and you can refer them. I understand that when you have to revise or you have to go brush up your concepts which you have discussed, which have been discussed during the class, you need the notes. So those notes will be uploaded on the BOS Knowledge Portal shortly. Maybe by today and or tomorrow they will be loaded and you can refer them. Okay. So with this, we come to an end of this session. Point is there. Okay, Radha is saying she's facing technical issue while unmuting because she has joined via BOS Knowledge Portal through Zoom. We are trying to figure that out, Radha, and that will be taken care of maybe by the next class. That will be taken care of and it will be removed. So you can in next class you can unmute. That option will be available in the next class. So okay. So with this we come to an end of the session. I think we can wind up the session, sir.
Yes, ma'am. Thank you very much. Thank you all students. Good day, ma'am.
Yes, sir.
Yes, Sanketji. Good day.
Okay.
Good day, ma'am.
Good day, sir.